Welcome back to a new video. Today I want to give you guys a massive breakdown on the US30, the Dow Jones, also known as the Dow Jones. And as always, if you're new to the channel, a sub would be appreciated, as I do provide valuable content, educational content on a daily basis. And if you enjoy the content, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. Now today is going to be a massive update. There's been a lot of news events that had happened, and that is exactly what I want to speak about today. But before we get there, we need to understand one thing first. What is it that drives the US30? Now, the US30, also known as the Dow Jones, is influenced by major economic data such as the rate of unemployment or inflation. Now, keep that two things in mind as we go through the video: the rate of employment or inflation as well. Now, the next thing I want to bring up is something very interesting that Mr. Powell had mentioned. So I'm just going to play the video very quickly, and then from there we'll jump into the next data that we have
in our economy and in people's thinking, then inevitably that will lead to much tighter monetary policy from us, and it could lead to a recession, and that will be bad for workers. So
Okay, so I'm not going to speak too much about what he said, but I think you get you get the idea of what he's saying. The fact that he's mentioning that we could possibly see the US going into recession, that's a very bad thing for the Dow Jones in particular. Because why? Because the first thing that we need to understand, like I said, that the Dow Jones is influenced by the rate of unemployment. Now, if you look at this article by Bloomberg based off the unemployment insurance claims that we had that came out now the other day. It says here the US initial job claims rose to the highest since mid-November. Also says here unemployment applications unexpectedly jumped to 230,000. The recent COVID surge forcing closures leading to dismissals. Now, what does this mean in general? It means basically that there's more people that had filed for unemployment money. So basically that means there's more people that had lost their jobs. We saw last month's NFP also fell very short. So that basically tells us that the unemployment is slowly but surely rising. Now we know that Powell spoke about inflation. Now the question is, how does the inflation impacts the economy? Well, inflation raises the prices. Okay, it lowers your purchasing power. Inflation also lowers values of pensions, saving, and treasury notes. Then we also just recently saw the whole scandal, or the whole massive outcome about the pension funds that is being reduced as well. Now, inflation also lowers the assets such as real estate, collectibles usually keep up with inflation. Variable interest rate on loans increase during inflation as well. So inflation basically, everything goes up, and it just makes whatever money you have, just makes it more difficult for you to go and spend it. Now we also know that Powell had also said that they are likely to increase the interest rate. But one thing we need to keep in mind, with inflation at record highs that it's been since the 1980s, they have to probably hike interest rates higher than anticipated. So how does the interest rates impact the economy? Well, a decrease in basically a decrease in overall expenditure due to the shortage of disposable income. People won't spend as much on goods and services. If they don't spend, there will be a shortage in the liquidity in the market, thereby leading to a bearish economy as well. Now I've spoken about this many times. When you see an increase in interest rate hikes, that basically means that more people, that things are starting to increase. And basically what that tells us in general is that things starts to increase, and that makes it even more difficult for people to start or continue to purchase or continue to start spending money, because things are starting to get expensive and people don't want to take out new loans and all of that nitty-gritty stuff. Now think about this for a second. Inflation okay, is sky high. That means people need to spend more money. Now, what do you think is going to happen if they increase the interest rates as well? So on top of the inflation that's already high, we can expect the interest rates to hike. And with the way things are going now, they probably have to hike interest rates higher than what they would have initially do it because of inflation that's so high. So they need to get to a point where they can actually balance the two out as well. Now, the last thing I do want to speak about basically is in general, people always think, you know, when you hear the word recession, you know what, you always think, what does that basically mean? So recession just basically, not just basically, but recession causes standard monetary and fiscal effects. Credit availability tightens and short-term interest rates tend to fall as businesses seek to cut costs. Unemployment rate increases, that in turn reduces consumption rates, which causes inflation rates to go down. So all of that needs to be met in order for the inflation to go down. But now, one thing that we do need to keep in mind, though, if the unemployment increases and the Dow Jones is or the US30 is driven by the rate of unemployment, what does that tell us? It basically means that we can definitely expect a massive bearish market coming for the US30. Now that was the fundamental side of the US30. Now the next thing we're going to do is we're going to go and look at the COT data. So the COT data basically tells us what the big banks, hedge funds, and institutions are doing in the market. And it kind of gives us a general indication of what the smart money is doing in the market as well. Now, looking at the report that we have over here, based off last week's report, we can see how hedge funds came in and they already started closing minus 9.4k short long positions. Sorry guys, long positions. They came in and they said, you know what, we're no longer interested in buying the Dow Jones anymore. And you can see over here they started adding 557 shorts, and you can see how the overall net positions decreased from 7.2 thousand to minus 2.8 thousand. Now, if that doesn't tell you that we can expect some drop in the US30, then I don't know what does. Next thing is we're going to look at the technical data that we have over here. Now, looking here on the monthly time frame, we can see here how the Dow Jones is currently testing this level of resistance that is now turned support. By definition, the market is supposed to reject that level and then continue higher. But according to the data that we just looked at now, things doesn't look as like that is what's going to happen there as well. Now, if we look down further, we can see how the Dow Jones had created this level of resistance from a weekly perspective. The market then broke above that resistance. Let me close that. So the market broke above that resistance, guys. Came back, retested. Unfortunately for the Dow Jones, the support did not hold, and all of that support is now once again resistance. And we can see here at the start of the new week how these candles are literally, it's not doing anything. But we also need to take in mind that there is a public holiday in the US today. I think it's Martin Luther King Jr. Holiday in his name there today. But we can see a base of last week close, ladies and gentlemen, how we had this resistance got broken. Support did not hold. The market broke below that level of support, unfortunately for the Dow Jones there as well, because what we can see is now the big banks are coming in and they're starting to see basically what's happening over here now. And we can see how they came in and they said, you know what, we don't trust what's going on over here. Just the fact that Powell had spoken about the fact that they could move into recession is enough to spook the market. Now, why do I say that? Think about it in this way. If you've got a business that if you've started a business of selling caps, for instance, caps that protects you from the sun, and all of a sudden the news where the report comes out, or before they even come out, you've got all of these investors that invested in your business to say that it's going to boom based of what you're saying, and then the news guy comes out to say there's going to be no more sun for the next 20 or 30 weeks or so onwards. What are investors going to think? They're like, oh shit, this is not a good idea, we need to get our money out of this business. And then as a result of that, your business starts to fall because you're not making any money, because people are spooked by what they have heard. Now, Powell had just mentioned the fact that we could see a recession. However, inflation, once again, ladies and gentlemen, is at a sky high, and we know that if inflation continues to increase, the unemployment rate starts to skyrocket, and the Dow Jones is directly influenced by that, as we said earlier, because the Dow Jones is basically moved by the rate of unemployment and or inflation there as well. Now let's get back to the technical data over here. So you can see how the market broke above this level of resistance, came back, support did not hold. The market's testing all of that support now once again as resistance. Now going on the daily time frame, what do we have over here? Now the daily time frame is as clear as daylight. Now if we just take a look to the left over here, we can see how the market had created or printed all of this structure that we had over here. Now this level here acted as a level of support. The market then broke up below that level. The market came back, tested it a couple of times as resistance, and the market finally came pull back when Powell started making up his own figures again, and the market broke above that resistance. The market came back, tested it, long liquidity weeks over here a couple of times. Happily for the Dow Jones, the market actually closed above those levels of support. So support actually out there for that last time. So there, unfortunately, last week support did not hold. Support finally got broken, and the market's back to test it as resistance there now at the moment. So how would we approach a situation like this? Now, before we get there, it's very important that you are reactive and not predictive, because we have to learn as traders to adapt to the ever-changing market environment. Now, anything can happen between the time I make this video and between the rest of the week as well. Powell could come in and say we're going to start printing millions of dollars into the economy again, which is something that they cannot do, because we also know that the US debt is at a massive high level. I think we're getting to about 30 trillion, if I am correct, based off the last statistics that I've sent you guys also there in the group. We know that, so we're sitting, so we are nearing that 30 trillion mark there as well. So the debt is increasing, and Powell was asked about that multiple times. Unfortunately, it was a bit shaky when he had answered those questions. So the way we can approach the situation, guys, is, well, from where we are now, we could potentially see a pullback for the market to go and test that level again. Hopefully, try and get some more liquidity out of that zone. Alternatively, if we don't see a pullback to that level, then we can expect the market to start dropping aggressively from where we are now. Not just because of the structural level, but also because of the fundamental data that we have to back this up as well. And apart from that, there's interest rates also skyrocket, as Powell said last in December when he got re-elected. We can also expect a massive drop in the stock market overall. Now, like I said, also we have to be reactive and not predictive. This move might not happen right from where we are now. We could also see the market break above that level, come back for the retest, maybe continue slightly higher first, grab as much as liquidity as it can. But unfortunately, as it stands now, we can expect the US30 to start falling and falling and falling through the interest rates, through everything that's going to happen, through the interest rates, through the inflation, through all of the stuff that is going to happen in the near future as well. But as always, let's make sure that the market, from a technical perspective, provides us with the correct information that we do require to make that trading decision over here. So, guys, I hope you guys enjoyed the video. Thank you so much for taking time out of your day to watch the video. And as always, smash that like button for the YouTube algorithm. And let me know down in the comments below exactly what it is that you would like for me to cover in my next video. And as always, cheers for ears.